Will 2023 bring the dreaded return to office? We're already here. Data from Castle Systems, who track badge swipes, so a 10-city average occupancy is at a post-pandemic high, albeit still below 50%. Well out of the pandemic. What's the impact of remote work on commercial real estate values? Kevin Fagan is the head of commercial real estate analysis at Moody's Analytics. Kevin, good to see you. How do you measure the impact of remote work on commercial real estate values?
Well, that's $1 million question right now. And I think there are a lot of us in the forecasting and analytics side have been working on that for the last 3 years, actually. And I think this is going to be a really exciting year because we're finally going to be this is the first year we'll be fully past COVID, and we'll be able to use this as a bellwether year to see what the return to office actually looks like. You know, we had Omicron last summer or we had Omicron last year, and then the summer, the fall, there was kind of a comeback, but now this is the real full comeback, and we'll get to see exactly when these leases start expiring, these long-term leases for offices, of which there's a lot expiring in 2023. We'll get to see what's actually happening when tenants are making decisions about how much space per employee they want to take versus what they did pre-COVID. We've seen a little bit of that, but it's at this stage right now, we're in such a transition period where companies are trying to figure that out. We haven't gotten a lot of really solid clues yet. There's been just as many stories of, tenants re-signing for as much space or more that they had before, like in the last 3 years. And we've also seen a lot of the stories where tenants are pulling back. It really depends a lot on the individual companies, but we haven't seen a widespread shift away from it. But this year might offer some real clues for the first time.
Yeah, it seems like most you talk to are reducing that footprint. Do you get a sense that return to office versus remote work is at least beginning to level out in 23?
Yeah, I think that Castle number that you showed there of nearly about, let's say right around 60% makes a lot of sense. You're going to have a lot of hybrid working now, where you have people coming in maybe 2 days a week, 3 days a week. Maybe it'll average around 3. That's kind of what we can see from a lot of surveys. So you kind of lop off the beginning and end of the week. That basically means your badge swipes that Castle is monitoring is going to level out somewhere around 60%, and that makes sense. Now, the real key here is of that 40% where you don't have people in the office, how efficiently can you turn that into less office space? And it's not really clear that you can be that efficient with that. So that's the kind of magic number, your efficiency factor.
So how have those buildings that are now much more competitive, those buildings, those landlords, how have they been forced to evolve in what they're offering potential tenants?
Yeah, we started to see offices get to be managed more and more like hospitality, even pre-COVID. That was really kind of starting to ramp up. We actually saw a lot of partial remote working, somewhere around the order of 9 to 10% on average across the nation. So obviously COVID changed that, but even before COVID, we started to see hospitality-like management of offices, especially in that high-end Class A, high amenity space, already start to happen. Hudson Yards is a great example in New York, and really, I think that's going to evolve in a really major way. I wouldn't say it's kind of like the iPhone revolutionizing cell phones back in 2007 exactly, but we are at a real precipice here where the experience of the office is about to be very different. So dynamic social spaces. Actually, here at Moody's, we just finished a floor that's very archetypical of what we're seeing now in a lot of renovations of office space, where you have just an incredible amount of different kinds of collaborative space, recharge areas. We have 2 libraries in that new space. We have like 3 different types of collaborative space. You have recharge space. So I think you're going to see a lot more of that, a lot more outdoor space. Right. So yeah, that's really the design changes are pretty dramatic.
I recently played pickleball at a New York office building. Moving forward, the concept of conversion from commercial/office space to residential, where are we seeing that, and how much do you think it'll pick up in 2023?
Yeah, you have to have a pretty steep decline in values and rents for offices to be a viable candidates for conversion into apartment. We had done a study on New York where we found that maybe 3% were viable candidates from both like a physical shape of the buildings, because some buildings cannot really be efficiently converted into apartments, but also just economically, we hadn't seen a big enough decline in office space, office values and office rents for it to be profitable for builders to actually take the risk of that kind of conversion.
Very interesting trends to watch this year. Moody's Analytics Head of Commercial Analysis, Kevin Fagan, good to see you. Thank you.